Tax strategy, not tax surprise. Sharon Horne-Ellstrom here, obviously not home, traveling and trying to settle in. It's weird. I've got a weird setup for recording. Not that any of this matters. Today, tax strategy or tax surprise. I say tax strategy, not tax surprise, because nothing worse than getting the letter in the mail with the IRS on it that says you owe them thousands and thousands of dollars. And how do I know this? Because this has happened to me early on in my life and in my businesses. When I was working in corporate America and I just had one or two businesses, I insisted on reading the tax laws to the best of my ability and doing my own taxes, doing everything myself. Anybody ever guilty of doing everything yourself in your business and in your life? Well, some of us do. And I found out not only that I was overpaying, but that I was missing out on a whole lot of deductions and credits and things that I could be deducting. That was the result of my first IRS audit. It took 2 years out of my life because I had a network marketing business and corporate income. And that is, but back then, that was a long, long time ago, but back then that was an automatic red flag to auditors and the IRS agents that called audits. But I ended up coming out ahead on that because they taught me and showed me deductions and things that I absolutely positively could have been taking that I wasn't. So I ended up coming out ahead, and I ended up getting a bigger refund than I would have otherwise gotten. So most people fail or have problems and get a tax surprise because of lack of planning, not because of, and most people overpay. The vast majority of people overpay their taxes, partly out of fear, because I think that the whole thing's set up to make you afraid if you don't pay your taxes, bad things are going to happen. The IRS is going to knock on your door with their guns drawn. They have guns now, apparently, under the last administration. And there's a whole lot more of them. Hopefully not anymore, but there were. And so there's this fear built up around April 15th is the deadline and you have to pay your taxes. And so a lot of people succumb to that. And instead of planning and taking all the legal deductions that they're able to and credits, mostly average people, below average people in terms of financial income and earnings, don't take advantage of all or even some of what is available to us. So most people overpay because of lack of planning, not because it's because of lack of knowledge and lack of planning. They don't know what they don't know. And I fell into that category, believe it or not. I thought I was so smart and was on top of things, but I definitely was not. I hired a CPA. Once I added my third business, I was like, all right, this is getting more complicated than I want to try to keep track of. And, the IRS code changes every year. And so I finally interviewed, I think, 15 different CPAs and firms before I settled in on the one that I wanted to work for. They saved me thousands of dollars. I think it was like $6,000 the first year I went with them. And so to me, that was well worth hiring an expert to do it for me and stay on top of all of the things. And now there's so much automated, you have to weigh it for yourself. If you're doing the things and planning and building them into your life, great, do them yourself. I know now my life's getting simpler and simpler, so I could probably hop on one of the online tax reporting things and get it done in maybe an hour or two, versus it used to take me like a whole weekend to do my taxes. So, but that's not when we should do it, right? We don't wait till April and then figure out what things are. We should be planning throughout the year and being strategic with our credits and our deductions and our different things that we can legally take. And I'm going to really emphasize legally. I will say the scare of taxes is real. Look at the people that have gone to prison and to jail because they didn't pay their taxes. So do it, but also make sure that if you can legally take some deductions, you do it. There's so many people that don't even take mileage deductions, which add up really, really fast. All right. So what are we going to think about today? I want you to go back and look at last year's taxes. I know this is probably the time of year you should be doing that anyway, if you haven't started yet, and see if you left money on the table by paying too much to the IRS or letting them keep too much of your money and getting a smaller refund check because you weren't taking advantage of things like, I talked about this in a previous video, my 401k and the IRA type matching that one of my employers did was 15%. If you took 15% off your top of your paycheck and stuck it in that account, they matched it up to 15%. Guess who was saving 30% for about 5 years off the top of my salary. It was a no-brainer to do that. Now that was something I knew because one of my coworkers had told me that, one of my department head peers, and I'm like, okay, why would I not do that? And I actually learned that in my first job in corporate America. Whatever the company says they'll match, you of course do that because that's free money. Secondly, excuse me, are you doing tax planning? And if you are you doing it all year round? Because it takes planning ahead and taking action in different times of the year and throughout the year. If you want to do mileage deduction, put a little notebook in your car and log it every time you have a deductible mileage expense, right? Any deductible expenses that happen throughout the year, write them down, document them, have the receipt, keep a little tax planning book all year long. Or file. So everything, I learned this from my mom. She's got a little tub. She lives in Texas and they can deduct sales tax on the receipts and on the money that they spend. But what they have to do is have the receipts. So she just keeps a tub and throws her receipts in it throughout the year and then takes it to her accountant and says, please handle this for me. And of course he does. So the third thing I want to talk about is hiring an expert. I know sometimes our egos make it difficult for us to hire an expert, but I learned with my first one that it's the ROI on it. It will pay for itself to get an expert to help you with this. I've seen this with my family. My daughter and son-in-law have gotten hosed by 2 tax preparers because they just went and picked somebody at the last minute, and they ended up having to pay thousands of dollars in because their tax accountant was horrible and made mistakes. So I don't recommend necessarily some of the big box firms that they've worked with, who shall remain nameless, but we want to be careful about that too. But we should be careful with who we team up with for everything, right? All right, so what are we going to do today? We are going to look at last year's taxes and see if we're leaving money on the table. Ask ourselves if we need to hire an expert, and if so, start looking for a good one and interviewing them. And this time of year is going to be tough if you want to get one for this year's taxes, because we're heading into tax season and they're super duper busy. And then finally, share in the comments below do you do your own taxes or do you not? And if you do, share your number one tax strategy and tip below, because that way we can help one another out, because we all have access to different information. And so if we can help each other, I think that's always a good thing. All right, if I can help you anyway, ask. Otherwise, have an awesome day, and I will, of course, see you tomorrow.